Today, we're diving into one of the most ambitious and, let's be honest, controversial economic experiments happening right now, Pakistan's Special Investment Facilitation Council, or SIF. Now, this is a super powerful group that was created to fix a really broken economy. But the way it's doing it, well, that's raising some serious questions. So just imagine for a second, your country's economy is in an absolute freefall. Foreign investors, they're running for the hills. Confidence is at rock bottom. What do? What kind of radical move do you make to turn it all around? Well, that's the exact position Pakistan found itself in back in 2023. And I'm not exaggerating. By June of 2023, foreign direct investment, that crucial long-term cash from foreign companies, it had plunged to a 12-year low. The money just wasn't coming in, and the country was staring down a massive economic crisis. So this crisis, which was really being fueled by all this bureaucratic red tape that just scared investors away, it became the spark for a totally new, really bold approach. It was clear the old ways just weren't cutting it anymore. So the government decided it was time to build something from the ground up. And that something was the SIFC. It was set up in the middle of 2023, and its mission was basically to be a single window for big money foreign investors, especially from the Gulf states. The whole idea was to slice through all that red tape and fast-track projects in key areas like agriculture, IT, and energy. So the SIFC arrives on the scene as this powerful new player. But listen, this was not just another government committee. No, this thing had a huge goal and a very, very unusual structure. Get this. The SIFC's first target was to boost foreign direct investment by $5 billion. That's a massive number, and it really shows you just how high the stakes were. This council was expected to deliver big results, and to do it fast. Now, here's what makes the SIFC so different, so unique. It's what you'd call a civil-military hybrid. What does that mean? It means that for the very first time, the Pakistan Army was given a formal, official seat at the head table of economic policy. This one move completely changed the game for how the economy is run in the country. Okay, so how does this powerful new body actually get things done? Let's take a look under the hood at how this blend of civil and military power is structured. You see, the SIFC is set up in 3 tiers. Right at the very top, in the Apex Committee, you have the Prime Minister sitting right alongside the Chief of the Army Staff. And it doesn't stop there. If you look at the Executive and Implementation Committees below, you'll see high-ranking military officers there too. Military involvement is woven into every single level of decision-making. And the SIFC has really used its muscle. It's pushed through a ton of different initiatives, everything from fast-tracking investor visas and cracking down on smuggling to launching these really ambitious plans for a domestic semiconductor industry. I mean, this council has its hands in pretty much every part of the economy. But here is the million-dollar question. Has it actually worked? A year into this whole high-stakes experiment, the results are, well, they're complicated. It's really a tale of 2 very different outcomes. On one hand, supporters of the SIFC can point to some seriously impressive numbers. In the 2024 fiscal year, exports jumped up by 10%. In the first quarter of fiscal year 2025, FDI got a 48% boost. And then there's the stock market. A staggering 73% surge in Pakistan's stock index. It was so big that Bloomberg actually called it the world's best performer in 2024. For investors, that's a crystal clear sign that confidence was roaring back into the market. And maybe most important for everyday people, inflation cooled off in a big way. It fell all the way to just 4.9% by November 2024. That's a 6-year low. So on paper, you look at those wins and they seem pretty huge. But is that really the whole story? Because these headline numbers, they don't quite capture the full picture. There are some really worrying trends bubbling up just beneath the surface. So while foreign money was flooding into the stock market, the country's overall national investment ratio, that's foreign and domestic investment all combined, it actually dropped to its lowest point in 50 years, a half-century low. So whatever the SIFC is doing, it hasn't translated into broad investment across the entire economy. And this is where the big international players are starting to raise some red flags. The International Monetary Fund, the IMF, they called the SIFC a major governance concern, and they pointed to its sweeping legal immunity for officials, its lack of transparency, and its power to just ignore existing rules. So let's just lay it all out like a scorecard. In the wins column, you've got that soaring stock market, lower inflation, and a nice jump in exports. But then you look at the worries column. A historic low in overall investment, some big unfulfilled promises like a $5 billion investment from Saudi Arabia, and of course, those serious governance concerns from the IMF. All of this brings us to the big picture. What does this whole SIFC experiment really mean for Pakistan's future? It's a debate that pits the urgent need for economic recovery against some really important long-standing democratic principles. You see, the SIFC is basically a fundamental trade-off. To get that rapid economic stability, Pakistan has created this incredibly powerful, less transparent body that gets to play outside the normal rules. And the question is the prize of stability worth the price of having a less accountable system? Which leaves us right here with this final question. Is the SFIC a brilliant new model for helping struggling economies get back on their feet, something other countries might even copy? Or is it a really risky precedent, one that trades long-term democratic health for short-term economic gains? The answer to that is going to shape Pakistan's future and, maybe the future of other nations facing these same kinds of crises.